Hey, good morning, everyone. Welcome back. It's Monday. You made it through another week. We've got earnings for a bunch of companies this week. Fubo reported this morning. They're pretty green. We talked about them last week. Luz had some choice words to say, but he didn't mention the timeline. So maybe this pre-market jump is a good shorting opportunity. Who knows? We've got Zoom Workday in after hours today. We've also got AMC tomorrow, as well as your favorite Target. A couple others, Wendy's. Can't forget Wendy's on Wednesday. Pre-market along with Lowe's, Neo, a whole bunch of Wall Street bets names. Then Thursday we've got Best Buy in pre-market and Costco after close. Can't forget Luce's second least favorite company, Big Lots, also reporting Thursday before open. And then, there's not too much on Friday that's particularly interesting to me, but maybe you guys have different views. So I'm really curious to hear which earnings you're looking forward to talking about. And let's start there. But just before we do, durable goods orders came in this morning at -4.5%, just a touch below consensus, which was -4%. Yes, and so as a result, we're seeing buy continue to hold steady and green in pre-market. But with that intro out of the way, let's kick it off. Who's got plays or ideas for us?
That's quite the introduction. Good morning, everyone. Just running down the list of Gamma Max plays, we have Laser, Luminar for March 17, $8 puts, 80 cents or less. I do want to point out someone else raised in the comments that Luminar has a major news announcement coming out. So this may very well be a sell the news event. Depends on how fruitful the announcement becomes. We have BHC March 17, $9.50 puts for 40 cents or less. ABBV March 17, 152.50 puts for 225 or less. TZA March 17, $28 puts for $2.15 or less. And RRC March 17, $26 puts for 45 cents or less. All these plays follow something called the Gamma Max cross theory. And the idea is that if you take the option open interest for a given ticker and turn it into a hypothetical options portfolio, you can then simulate at what price the portfolio total gamma is highest. And the reason why this is important is institutions are often very sensitive to the gamma in their derivatives portfolios. And sometimes it's cheaper to manipulate the price in a more favorable direction than to purchase more hedging insurance. And it's that manipulation in price where these trades are most successful, or at least that's the most plausible thesis I have for why this phenomenon works. Who else has plays to share?
I can share if it's okay.
Of course.
So I'm pretty new to WallStreetBets and trading in general. I just have one play I'm doing today, TRKA, which is a penny stock with a small 20 million float. I just wanted to bring it to everyone's attention because I think today's the day where I might make money for the first time. But yeah, that's it.
So they're up in pre-market a good amount. What makes you say they're going to go even higher?
Well, I just been watching it for the past couple months, and I just been going with my gut. I have no DD because I don't know how to do it.
Well, the whole point of DD is just trying to figure out why you think something will happen. There are plenty of ways to do due diligence. Some take a more mathematical approach. Other people use the stars, quite literally.
Yeah, so I guess I'm a star player.
You're not the only one, man.
Some people use a chicken.
That's true. Some people do follow what a chicken decides.
Hey, that chicken's been right more than the stars.
So do I have to buy a chicken?
You don't have to. I mean, they poop everywhere.
Yeah, any
As long
farm
as-
animals should do. You can go with the
Okay.
sheep or a goat. Yeah.
But anyway, thank
Okay.
you for sharing. So, what other plays do we have?
I'll reiterate Luce's bearish stance on Fubo, which is not working out too well today. That's based off heavy cash burn and the fact that they're going to need to raise probably pretty soon.
It appears Fubo had better than expected World Cup subscriber counts.
So,
So their revenue is up, but their earnings are down.
I guess. Don't you love it when companies do that?
Well, it worked out for Home Depot.
Fair point.
For those who weren't aware, Home Depot lost almost 10% of market cap because of a revenue miss and an earnings, what was it? An earnings hit or match.
Does anyone think we're going to have some interesting performance with Under Armour's new CEO taking the helm today?
Tell us more.
Oh, they have a new CEO who's hopefully going to turn around the company despite the fact that I think their overall stock price has slumped, 10% recently?
Are we talking about
They
the same?
have a $150 slip speed sneaker with a heel that collapses to turn it into a slide. I guess that means like a slipper or a thong if you're in Australia. I'm not sure if people are willing to pay $150 for a convertible shoe that is not good as a shoe or good as a slipper. But I've been wrong before.
You got to wonder how durable the shoe's going to actually be with a collapsing sole.
Someone in the comments mentioned company DNMR, which is Danimer Scientific. Apparently, they produce non-carcinogenic plastic, so no vinyl chloride or an alternative to vinyl chloride. But my suspicion is the cost of the material is too high relative to any sort of vinyl chloride, so it hasn't taken up as much traction. Speculation on my part, just to be clear.
Hey, can I ask a question? Am I a bad person if I'm sitting here drinking rum before I have to go to work?
As long as you don't have to drive for work. You're not a forklift operator by any chance, right?
No. I actually run a big web printing press. We actually print retail inserts for newspapers, Macy's, Home Depot.
Yeah, you're a bad person.
Oh, really? So,
Yeah.
out of curiosity, do you have a sense of the orders for major big box retailers?
Well, actually, we actually do print Macy's, and they're actually, as you're all well aware of, they went online this year, but they are actually doing print ads this year. A lot of companies that actually went all digital are actually going back to paper, believe it or not.
I believe it because paper is very cheap. Do you have a sense of the distribution of these inserts? Is it geographically constrained, for example?
Yeah, no, it's we actually cover the whole country and Hawaii.
Correct, but for example,
Hawaii is part of the country.
does New York, let's say, is there a larger order of New York
Yes.
distribution versus LA versus
Yes.
what's another major metropolitan city? Chicago?
Absolutely. It is. Yes, it is.
Okay, good to know.
Yep.
You're not a bad person for day drinking. You're a bad person because of your line of work.
Oh, thank you very much.
Someone in the comments asking about Rocket Lab, ticker RKLB. I think it could go down or it could go up. There's your opinion.
If you think it's only going to go one of those directions, please raise your hand and tell us why.
I feel Tardstrology would be able to answer this question if I was able to read it today. But we got cloudy ass Tardstrology today. So unfortunately, no Tardstrology, but I do have a Tardstrology play of the day. I am looking to be extremely regarded and get into some $12.50 Dole calls. That's right, the ticker is Dole, D-O-L-E, Dole. All right, I'm looking at the 3/17/17 data expiration calls on Dole. They're 25 cents currently. I'll be looking to get in at 20 and then double down when I have to.
The first time having those expire worthless didn't steer you away from those?
Fuck no, it didn't. Fuck those hedgies. I'm gonna keep buying Dole calls until those hedgies get fucked. I'm sorry, opinion, but fuck Ken Griffin.
Well, I mean, every time they expire worthless, you're putting money in, well, someone's pockets. Not to rain on your parade or anything.
Well, the person who sold the call covered. That's who I'm putting money into their pocket. They got the shares, so they deserve the money.
An interesting way to see it. Thank you for sharing, Masked. Who else has plays to share?
Anybody watching LHDX today?
Somebody mentioned Luminar. I think they inked a huge deal with Mercedes just recently, and there's some more deals in the pipeline. It's a big deal. Also, Lithium America? I think they were being blocked from a huge mining site in Nevada, but then they got approval just recently. So something to look for.
Something that just popped back into my mind is it's a bad day for Norfolk Southern, or at least it's been a bad month for them. They had another train derailment this weekend. No chemicals spilled into the air or groundwater this time, but being in the news a lot is not helping them right now.
I have a question on the luxury market. So, overall, car makers such as Rolls-Royce, is it fair to say they are an inflation hedge, and then they're a good long-term investments because their sales are pretty strong?
Well, keep in mind, Rolls-Royce, I believe, the car version of Rolls-Royce is owned now by, is it Mercedes or BMW? It's one of them. Rolls-Royce, the company, is only really, their major product nowadays, I believe, are their Trent jet engines, typically used as the Airbus NEO planes, new engine option planes.
Yeah, the jet engines, and they went up last week because the airline industries are going up again. Like IAG reported huge profits, or reported being profitable again. So that's driving the Rolls Royce.
So what you're saying is that they're not a good performer during inflationary times. Instead,
No, the thesis is good. The problem is that the Rolls-Royce car brand is a subset of a much larger car conglomerate. So it's difficult to isolate just the performance of the Rolls-Royce car brand company.
Yeah, that RYCEY is doesn't cover the cars.
It's jet engines, and they're making they're doing some nuclear power plant deals here in the UK. So they're doing some kind of nuclear turbine thing, something like that.
They're trying to make small nuclear reactors, as one can put nuclear reactors to be small, that are easily pieced together. Think like IKEA nuclear, essentially.
That's it.
So, if your thesis is that ultra luxury will continue to stay profitable, you probably want to look at LVMH, which is the company behind
Yeah,
Louis Vuitton and other brands.
yeah. I
My
was gonna say
concern with that,
LVMH and which is MC, and also Tiffany and Co.
now my thing about Louis Vuitton is this: the rate of growth has forced them to try to attract Henrys, high earners not rich yet. And I don't know to what extent that's sustainable because high earners typically are affected in layoffs, which have happened, which we've received a lot of, especially in the tech space over the last, so what's it now, 4 months?
Right. I don't disagree, but it's not, it's not it looks like it's not impacting them. That's the thing that I don't get. That's why I'm asking.
Oh, here's why. They, in the course of their layoff, they received severance, and those severances often are for, let's say, 4 to 8 months. So the first wave of layoffs hit in October, right? So October plus 4 months is around now, end of November, end of February. And then 8 months from October would put us in June. So let's say that the majority of severance is paid out because some people weren't at companies for as long, will start expiring in April, which means April is when these laid off folks who, if they don't yet have a job, will be filing for unemployment, and that'll reflect in the May reporting of the April unemployment numbers. So if the April unemployment claims stated in May are much higher than expected or much higher than in the past, then we know that the impact of these layoffs seems to have more staying power. And it's rather convenient for the likes of J-POW and the rest of the Federal Reserve Board to basically say, hey, look, unemployment's finally going up. What we're doing is working. We can afford to stop raising rates. And the moment they say or they announce that the rates are staying the same, instant calls.
So what you're saying is it's pretty much like on a lag and based on the unemployment data. That would
Unemployment
impact.
data is the figure that Jerome Powell for the Federal Reserve Board
Right.
has explicitly stated what they're paying attention to as an indicator of inflation in lieu of inflation itself. So combine the unemployment data along with the new formula for calculating CPI, which effectively ignores the impact of COVID, and you have a convenient backdrop against which they can claim to stop raising rates, whether or not it actually benefits the American economy.
It's just for me, it's hard to wrap around the idea that like Walmart is reducing its outlook, and typically you go from from these high end retailers and they start going into low end retailers. So there should be more demand for Walmart in these times.
In theory, yes. In practice, not necessarily, because you have to remember the bulk of Walmart's business is not in staples like groceries or EBT purchases. It's in more impulse stuff. You don't really need a 60-inch TV, but the margins Walmart makes on those, massive relative to, let's say, that 16-ounce loaf of bread, which EBT covers. Does that make sense?
Yeah.
And thank you, those in the comments correcting me. BMW owns Rolls-Royce, the car brand.
So if unemployment was a lagging indicator, then wouldn't J-POW already be kind of forecasting and being ahead of that, as opposed to just saying, I'm going to wait for the data, right? Like
they intentionally wait for the data because they could also be wrong about the impact of their rate hikes.
Is that because people could be reemployed like during that period, during that lag period?
Yes, and I think that's partly what the rest of the market's waiting for, to see how net of these layoffs, because let's face it, while the tech layoffs got the headlines, there were plenty of other layoffs from non-tech companies, which flew relatively under the radar. So the sum of all those layoffs, we need to see to what extent the sum of all those layoffs impacts the U.S. unemployment rate, or at least the unemployment claims. If it's substantial, then unfortunately that's potentially bullish because it signals a potential end to rate hikes.
I guess what you're saying is that it will have a negative impact. However, we don't know the magnitude of said impacts. Is kind of what Jay Powell will then base off in terms of next moves.
Correct. And the market is much faster at inferring these outcomes than we are. So it's the easier way to divine this or to infer this is just to see how the price reacts. These are plausible explanations for unexpected moves in price.
Yeah, I would assume they would use some type of pro forma financial models, right, to forecast kind of the implications. But I mean, I guess they won't know the magnitude till it happens.
Correct. And someone in the comments did bring up earlier, you can't extrapolate the entire global luxury market based on tech layoffs. And to some extent, I agree. However, tech layoffs make up the bulk of Henry shoppers. The Henry stands for high earner, not rich yet. And those are the ones whom Louis Vuitton and their peers are trying to attract because they've already tapped in the high net worth and ultra high net worth categories. So you either need to increase, in order to keep growing, you either need to increase the value of your individual customers or get more customers. And at least with some exceptions, I haven't really seen Louis Vuitton and the other portfolio companies in that space increasing the prices of individual products. They still have a reasonable, the distribution of pricing among their product lines appears to be the same. Not that I shop at Louis Vuitton, because I work behind the Wendy's.
I feel like Louis Vuitton and companies similar, like they'll start suffering, especially not just from people's discretionary money going down from unemployment, but also the fact that it's not becoming as luxury as people once perceived it as. There's just too many fakes. There's too much drop in quality to reduce price and get the typical Henrys involved in buying. I think it's a bigger implication.
In order for that to happen, we probably need to see layoffs from Louis Vuitton. It so happens one of my neighbors is an accounts payable processor at Louis Vuitton, and the amount of delinquencies for people who owe them money hasn't really changed. So I'm waiting for that to increase. And when it does, puts.
All right, good morning, everyone. I was just wondering if anyone had a play about the lithium mine that was recently discovered in India, and if yes, could you share some tickers about that? Thank you.
Well, how big is the mine? Like, how is it going to impact the market at all? How big is it? Do you know?
I'm not sure about the specifics of the mine being discovered, but I heard there was an internal talk about Tesla being in contact with the Indian government to get some of the supplies.
All right, let's clarify something. When you say lithium mine discovered in India, I'm assuming you just mean a patch of lithium that could be mined, not like there's an
Yeah, I think he
existing
means that.
mine in India that people are like, oh, this exists. We can start mining lithium, right?
He's only found workers and cranes.
Right, like I'm just assuming you mean like they found a large patch of potentially economically viable lithium somewhere, right?
It's a deposit discovered.
An ancient Incan lithium mine.
So if that's the case, and I don't know off the top of my head what the lead time is for a mine, let alone the permitting process in India, which is probably also greatly influenced by local government, but I think you would want to start with looking into what the processing time is, because a lot of those mines can take like over a decade to get online. So the answer will be it doesn't matter right now.
Yeah, India has a lot of bureaucracy for a third world country.
Yes, that's correct. But I was just wondering if anyone had any play in concern, like in connection with that. So that's all. And is it like I was just wondering if anyone's looking into QQQ puts for the next coming weeks, maybe 30 days down to expiration.
Why do you say that?
I feel like the market makers are trying to hedge puts. There are a lot of puts that are going to expire close to 370, 380, 390 by March 17th. So the market makers are trying to pump up the market just to make those puts worthless.
So if the thesis is that market makers are trying to prop up the QQQ tickers in order for the short QQQ open interest or the QQQ put open interest to expire worthless, does that mean you should wait until those puts expire to enter the new ones? And more importantly, should you then wait to buy SQQQ calls instead because that's the leveraged short ETF?
So I was just wondering if I mean, I'm starting to look into it, so I'm not trying to get into QQQ puts right away. So I was just wondering if anyone has any play way out of the money, 30 days down to expiration. So I
In other
will
words,
be
are
trying
there
to.
any bears in the chat?
Plenty of bears in the
Right.
chat. Some of them even straight. If your intent is medium term, let's call it 30 to 90 days, QQQ bearish, you could probably buy SQQQ calls when the price hits like 35.
Gotcha, Happy. Thank you.
Someone in the comments asking how much money you could make? About 350.
You can make at least $14 an hour at Walmart.
The reason I was talking about QQQ was I'm sure you have seen all the macro indicators from the past week and the week before, and there's no reason for market being pumped up like this. And right now you can see there's like a 1% huge rally. So
Also true, but consider the impact of QQQ's holdings. If you look at the QQQ ETF itself, it's basically a weighted Google portfolio. So theoretically, Google and QQQ could be turned into a pairs trade if you hedge the non-Google portion appropriately.
also, like I'm not really sure if anyone has observed. So the last Friday, during the last hour and a half of the trading session, the market randomly started to spike up. So, like, I don't know, I don't see a justification, but there are like a lot of Fed speakers. They were trying to say there's a lot of work being done and that needs to be done, and inflation is really not on track.
We're
So,
approaching quarter end, so it's possible this is rolling over of quarterly derivatives.
Hey Hardy, can we rewind for a second? Why do you say QQQ is a Google portfolio?
I didn't say it was a Google portfolio. I said if you look at the QQQ makeup, Google is weighted much heavier than the rest of the portfolio. So when Google moves, QQQ is likely to move, let's call it hypothetically 40% the move of Google, just because of the sheer size of Google relative to the other companies in that ETF. Does that make sense?
You're talking QQQ, right? Like Invesco QQQ?
Yeah. Am I getting the holdings wrong?
Yeah.
Or is Amazon, or is Microsoft bigger now?
Yeah, so it's just like market cap weighted, I believe. So, you have like Apple at 12%. You have Google Class A, Class C at 7% total when you add those two. You have
You're right,
Microsoft at 12%. So I think it's
You're
just
right. I have it backwards then. Thank you for correcting me. So it's Apple, Microsoft, Amazon at a combined, let's see, 12, and 6. So 30% of QQQ is represented by Apple, Microsoft, and Amazon.
So it's a tech ETF then, because that's overwhelmingly tech.
It's still a tech ETF. It is very intentionally a tech ETF.
Yeah, it's a market cap weighted tech ETF. So like if you wanted to hedge out the large cap tech, you might find like a smaller growth fund. Something like IWM. IWM's a blend though, so you want to find some ETF that's more growth oriented and holding smaller companies, and then you could do pairs trade where you're trying to hedge out the You're trying to hedge out the big, like Garpy type technology holdings in QQQ against the smaller ones in that sort of growth portfolio. Maybe ARC could be something of a proxy for a small growth portfolio, but they also
That's an
hold a lot of
interesting thought.
Tesla. Yeah, I think it came up last week. Somebody had the same idea.
Cool. Thank you for sharing. Who else has plays? Someone asking about Netflix. Let's see. So Netflix is currently at delta neutral, or just below it, and historically, going back to roughly October 2022, Netflix would come back up over delta neutral after crossing below and stay there for a while. So short-term Netflix, let's call it 60 days, more bullish than bearish. According to the trading thesis that I follow, which is mostly how the institutions play the derivatives markets. I'll put the link in the comments for everyone else to follow along.
And Netflix announced recently that they're lowering prices in I think about 30 countries or something like that to attract new customers.
I think they're lowering prices in part because the account sharing basically means they'll earn, instead of 100% more revenue for the people who are buying another account and not sharing the password, they'll earn a net 20% revenue. So the guy, excuse me, the guy who, the first account holder pays, let's say, 40% less. The new account holder pays, well, more than they would have otherwise.
So, but decreasing the prices in other countries doesn't affect their foreign reserves. When they're reporting the earnings, they do report the forex adjusted based earnings, right?
Well, keep in mind, by increasing the number of paid subscribers, it's actually quite bullish for Netflix. So instead of, let's say, having 100 million users but only 50 million paid subscriptions, you now have that same 100 million users, but with 75 million paid subscriptions because of the decrease in the monthly price. That, at least in the medium term, is more bullish for Netflix than not.
I think
Does
that's
that
the
make sense?
logic. Yeah, that's the logic.
But Hardy, isn't that considered discretionary spending? And don't you think discretionary spending is going to go down, which is going to impact Netflix?
Well, let's call it entertainment, right? In terms of entertainment options, you have Prime Video, Apple TV, Spotify, going on vacations, traveling to various places, doing cruises. What else? Going to various theme parks. So that covers the likes of Six Flags, Disney, Apple, Google, Amazon, Spotify. What's travel? All the airlines, and then the hotels. So suppose you have less money to spend this year on entertainment. Which would you drop first? That trip to Vegas or your Netflix subscription?
Well, it'll be the trip to Vegas then.
That's my perspective on it.
See, I don't have my own Netflix account. I share, but then when I saw the article, I was like, okay, I'd actually just get it because I think about, my monthly spending and, do I really need Netflix? I've already got Amazon Prime and other streaming services, but if it's cheaper, I'd go for it.
But Hardy, if you're making the argument of rising unemployment, which I think a lot of us agree, then it doesn't matter whether you have to choose, like, for example, that Las Vegas trip or any other trip and subscription. It's going to be all of them that are going to get cut. Don't you think so? If unemployment goes up,
I
Well, at
doubt
least you could
I
stay
doubt
home and
all of them get cut. I mean, what feels worse than you lost your job and you're sitting at home and you can't even watch a show? Like,
exactly.
what's a better way to pass time cheaply? I mean, you probably spend less on Netflix in 1 month than you do just going to a bar and having one drink, right? So, I mean, I think it's one of the last ones to go, to be honest.
but their
Exactly.
subscriber growth is down. That's what I'm trying to get at.
So keep
they-
in mind for pretty much all the streamers, a lot of their subscriber numbers are very much based around what content has recently come out. A show will come out, people will subscribe, they'll watch that show, they'll cancel, they'll move to something else. And that's just for the streamers in general. So do keep that in mind as you check their numbers. It's heavily correlated to what content they're putting out at that time.
And I think the price changes are also targeted to poorer countries. That was the thinking.
Oh, so you're saying like the U.S. price changes are there? There's not price changes.
You're saying
for
that
U.S.
the
on the
U.S.
horizon?
Are you saying the
So
U.S. Prices are subsidizing poorer countries for
so
Netflix
in
subscription?
in the Caribbean, I don't know about Latin America. I'm from the Caribbean originally. When I'm in the Caribbean, the prices in the East Caribbean, we get the U.S. prices. So I didn't read all of the article, but I believe the thinking is targeting some of those third world countries and other places where the subscriber numbers are probably not as high. And I know like the local cable companies in those countries were already struggling for market share against Netflix because they don't have as much content as Netflix does, comparing streaming to live TV. That's a lot of silence.
Yeah, I mean, I just also say from a content perspective, these like sports pseudo documentaries that they're doing, not pseudo documentaries, I guess they are documentaries, but the Point Break with the tennis and then Drive to Survive. I think the newest season just released, Friday or something like that. There's a Full Swing with golf. Those are really, really interesting. I follow Formula One. I definitely follow tennis, and all my tennis buddies are watching that show. We're all talking about it. Um, I'm really impressed with the production value. Like they're finding ways to find like adjacencies and markets, and then go after them with really high quality content. It's very impressive. Um, Not something that I expected out of Netflix. Honestly, I thought they kind of reached their pinnacle, but and they're still killing it.
Yeah, I think there's room to grow, and probably like what Hardy said about people subscribing and then unsubscribing when there's peak times. Netflix is seeing all this. If there's particular shows that people want to see, they subscribe and then they cancel. By lowering the rates, then it may just you may not cancel. You might just keep it.
So for argument's sake, 6 months out from now, are you guys saying calls out the money for Netflix? If you guys had to take a 6 month out option right now, on based on Netflix,
I'm not
Likely
sure.
to
Cash
I'm
secured
not sure I
would
would
be
do a call.
240.
Sorry, sorry.
what was the Hardy?
Cash secured put around 240 strike.
6 months
Yeah,
out.
that sounds
Yeah.
pretty good.
If it was 6 months out, that's what I would look at. Because as Netflix begins to own more and more of their content, I imagine that content will continue to pay dividends down the road, as opposed to the previous model where they were basically reselling licensed content. There was no real model to grow because you had to get more content licensed, but you only had a fixed revenue stream coming in from the subscriber base. So Netflix, from what I can see, at least on my side, with a US account, has invested much more heavily in cheap reality show style content around cooking and dating, and occasionally documentaries. So I imagine the payoff for those is much more niche and much higher versus another Squid Games or another what's that? What's their leading show at the moment? Wednesday or the other one, Stranger Things?
Wednesday.
Yeah, Stranger Things had a lot of promotion. I mean, they were doing these big things in like major cities, like
Oh, correct. But
creating
what's
these
the
like
payoff?
rifts in the ground. Yeah, exactly. Like I think the margin is not there
Yeah,
compared
they
to
have a
something
lot
like
of like they have freaking
Anyone catch that? Latter day sound like you were in a cornfield.
yeah.
I'm in a dead spot. So I was saying like they have the collectibles in that, but they also have like frozen pizza from Stranger Things. So some of those shows, they're doing their best to monetize after the fact, which is the big problem that Netflix has had is like you pay a subscription to watch shows and then that's it. You're not having anyone go past that. But with Stranger Things, they're starting to really branch out and get revenue that comes back well after the show.
Well, I think to Hardy's point, like the margin on those like docuseries and those cheap reality shows is huge. I think Stranger Things takes a lot of money to produce. There's a lot of promotion involved, a lot of marketing and such. Probably paying the actors a decent amount at this point because they're probably getting calls from every Jack, Tom, Harry, Dick, and Sally in the in Hollywood looking to get new talent. And obviously they've proven themselves to some degree, but yeah, those documents series they're probably hundreds of thousands of dollars to produce, and you're getting subs on them. You're getting very long lived content. People will go back and watch the older seasons once they've watched the current one.
Okay, but compared to, let's say, Hollywood movies, Netflix has better margins, right?
I didn't say that.
So you're saying, so the cost of production is about the same or higher, you're saying? As
The
the
Hollywood movie is demanding some amount of revenue per view of their content from Netflix. So Netflix may be paying them, let's say, 10 cents a view against the revenue they're receiving for all subscribers on the platform. So it's actually to Netflix's advantage if you don't binge watch a whole bunch of movies all at once.
Yeah, and also remember, like when new subscribers come on, and if you think about third world countries, there's so much content already on the platform that they may not have seen, and they'll stick around. They'll keep their subscriptions for a while.
Also, the catalog available across geographies is not uniform. So
No, it's not. Yeah,
it's possible the more expensive stuff that Netflix doesn't have a license for will not be available in Latin America, let's say.
So all of these could be offset by the increase in subscriber growth.
In number of paying subscribers.
Yes. Okay. Okay, gotcha.
Yeah.
It does.
You
You
say
can have
pay-
the same number of viewers, but if the proportion of those viewers who are paid subscribers increases, that's bullish for Netflix, and more importantly, allows them to borrow more money to finance new content generation. That was a major shift that Netflix made, I want to say like 2016, 2017, which led to the development of shows like Stranger Things and Wednesday. Those are two very successful examples that came out of this Netflix bond sale, and I'm sure more will appear.
Sounds good. So, an increase in their revenues, let's say, this year, maybe.
I wouldn't say increase in revenue, but but more like increase in margin, because revenue is kind of fixed or is less volatile than their content creation cost, right? Because
Gotcha.
the number of subscribers month over month doesn't really, well, I believe, doesn't change meaningfully now.
Mm. Makes sense. Makes sense. I was thinking the other day, how come they don't look at things like I was staying in a hotel and I was thinking, why can't we have Netflix in the hotels?
Because the
Some of
hotels
them
don't want
you
to pay for
can't.
Netflix.
Oh, I'm in the UK, so I guess maybe that's the difference.
So
There are
I've
several
been a couple hotels where like you can actually log into your own account and then you can access it. As far as like hotels getting their own subscription so you can watch it, that would be a whole different ballgame.
That's exactly what I mean. I mean, like as a business model, like Dish Networks and some other content providers work with hotels, pay-per-view, etc. So Netflix should be looking at hotels, cruise lines, etc. I think that's a huge market for them.
If hotel chains are willing to pay, and hotel chains are only going to be willing to pay if they think that offering that service will get more people in their hotel versus competitors. And I'm not so sure if that narrative
And
holds up.
they're also only going to pass those costs on to the guest, which means higher nightly room rates, which I think is not what they want.
Alternatively, a Netflix could just let it be free at a couple hotels just to get people interested in their shows when they stay there for a couple days and hope
Yeah,
that
but
gets them to subscribe later.
What percentage of hotel guests do not have a Netflix account?
Well, I'll tell you this. When I was working at Witham Hotels and Resorts, and some of us were, some of the accounts were managing hotels, a portfolio of hotels across the country. There we weren't spending money on any Netflix subscriptions for these Wyndham hotels that we had. It was just considered it wasn't worthwhile. We paid for cable, but we never paid for any other subscription model.
Yeah, so that's what I was thinking.
Because guests just come and go. They're there for a specific time. They already booked ahead of time. They're not planning on staying more just to watch a Netflix show, and for us to have an increase in that Netflix subscription.
So not staying more, but like if you're in the room and you have pay-per-view options, like I think Netflix should be one of those options. Either that, or they offer like to hotel chains some kind of special package that then creates a revenue stream for Netflix. That's what I would do if I was CEO.
I'm not sure about that because our hotels have to. There's a lot of competition when it comes to online pre-purchasing, like Booking.com, Priceline. They do a very good. Even though they advertise their Wyndham, they're also in competition with other hotels like Hilton. So yeah, they could choose pay-per-view, but we never did that. We did all-inclusive cable and internet. But never like pay-per-view. We never had our guests pay more because we don't want them to have like a sticker shock when they come in. Because again, some of them are walk-ins, but most of them have already pre-booked the hotel. They already know how much they're going to spend, and they already have a destination of where to go. They have other things to do. They don't want to come in and say, "Oh, now I got to pay if I want to see something on pay-per-view."
I imagine the people who are in hotel rooms streaming are business travelers, not leisure travelers. Because after a long day in a remote office or at a customer site, that's the segment who would be more willing to binge watch something on Netflix.
I would say yes, but most of them are just a mix. I wouldn't say it's mostly. But those who are business travel, they would spend more.
Yeah, they can just expense it, right? So they'll pick up whatever.
Well, Netflix, if you're listening, next time I stay in a hotel and the TV's not smart enough and I can't log in, it'd be nice if, I'd pay for it. I'd actually pay for the subscription while I'm there.
A day-like subscription model.
Okay, maybe we should change the conversation. Chat wants us to talk about something else.
Yeah, I was
10 minutes on market.
Someone is asking the opinions on a list of varied tickers who I assume have earnings soon. So to answer your question, Bitter Data, it could go up or it could go down. Who else has plays to share?
Hey, Hardy. I wanted to circle back on the SQQQ for a second. So I was comparing the last year chart to TMV, which is short long-term bonds, and it seems like that's been a better play given the interest rates impact bonds a little bit worse than tech. So I didn't know if you had any thoughts on whether that's still a good play to get calls on that going forward.
So the thesis is calls on bond pricing or bond portfolio pricing?
So the TMV is a 20-year Treasury bear 3x. So because interest rate hikes are negative to bond prices, and I mean we're also coming off of a 40-year bond bull market. So I've just been noticing that shorting long-term bonds has been much more lucrative than shorting tech over the past year since rate hikes have been going up. And that particular ticker.
Okay.
What's that?
With the current inversion of the yield curve, does that imply going bullish on TMV means the yield curve inversion will become wider?
That's what I'm not too sure of. I don't know if it's still going to impact it negatively, if it's going to be flat for a while.
My point is, an inflection of 0 is much more bullish for TMV than an inflection of minus 20 basis points. right? Because what's the probability of going from 20 to 40 basis points versus 0 to 20?
Mhm.
Presumably lower, unless like something really fucky happens.
Right.
That's my perspective anyway.
Yeah, I might have missed the boat on that one, but I'm still keeping an eye on it.
Somebody's asking about Warner Bros. Anybody have a recent play on Warner Bros. Based on Luce's DD last week?
He was advocating for calls, right?
Right, and I
Use
know
calls,
some people.
long shares.
I would wait for Warner Bros. To hit around $18 a share before I go long.
But he was also... Sorry, Hardy, go ahead.
There's a probability it'll go long today, especially with earnings coming tomorrow, well, Wednesday morning. But at $20 a share, at least for me, it's a little too rich.
And remember, Luce was also pretty much advocating that he was doing that based on expecting Warner Brothers to beat the Harry Potter drum into the ground and just scream like Harry Potter franchise stuff every other word at their earnings.
Did Warner Brothers buy the Lord of the Rings franchise?
I thought Amazon has that because don't they have
They have the TV series, not the movie series.
Okay.
No, but Warner Brothers has Lord of the Rings. Amazon has the Rings of Power.
So Warner Brothers is 1569 right now, is my quote in the pre-market.
I'm showing 2050. Oh, I'm using the wrong ticker, aren't I? Warner Brothers WBD. Okay, hold on a second. Let's see. Yeah, they're Gamma Max. I'm staying far away from Warner Brothers.
Yeah, Luce probably feels pretty good because it's been nothing but up since he's made that play recommendation. But
So has everything else since January 1.
True.
Warner Brothers has been running pretty much since House of the Dragon hit TV and turned out to be good. That started like a very nice time for that stock, and it's just been doing well since. Then Last of Us was good, so they've been coming out with some decent shows, and that's been helping them.
White Lotus, wow.
Didn't they just also sue this company Paramount Plus for having South Park?
Correct. Yeah, they reported actually last week, not this week. I'm sure that was just the wrong ticker, Hardy. But
yeah,
they were. But again, they actually did come out and say they had over, not quite the 2 billion of revenue that Luce was talking about, but they've already had 860 million just in the first 8 days of the new Harry Potter game. So just to fuel his thesis in the stock price. Basically wanted them to say Harry Potter 1,000 times on the call, and it is close.
Abracadabra.
I mean, he's not wrong. It's a very milkable franchise if they want to do that.
They're trying to replicate what I assume Disney has done successfully with Marvel and Star Wars. I don't know what other universes exist in Disney space, or the Disneyverse, I guess.
Just to play devil's advocate, I will say this: their number one source of refund is still linear television, which is a dying business. So the faster they can get into either the gaming or the better they can do with their streaming, I think the better off the company will be in the long term. So, but they are working towards that, and I think that is again part of that bullish thesis.
Someone in the comments asked whether or not calls on NCLH, I think that's Norwegian Cruise. Let's see. They have earnings tomorrow morning. Maybe, maybe not. I haven't really been tracking the load factor of Norwegian cruise ships. But if you're able to go back in time to see the number of empty berths for sailings, you can infer that. keeps asking about Boyle. What's your thesis on Boyle? In order for Boyle to go to the moon, you need natural gas prices to go up. And at least recently, the only reason why natural gas prices go up is because of a shortage. However, with the demand from Europe waning, I don't see how a shortage of natural gas will come up.
Going back to Warner Brothers, also, what will happen with Charter Communications? They with this cable cod thing.
I believe Charter still has a very lucrative internet business, so relatively nothing.
Same thing with Comcast. I think the internet business is really I think it's gonna be the next thing that's gonna just be most of their revenue.
Basically, linear TV cable providers have already pivoted or started pivoting out of depending on that business and into alternate businesses. I believe.
Out of internet, out of like.
No. Linear TV meaning like cable providers.
Oh, I see. Yeah.
So they moved toward internet-based business, toward streaming services, toward, I believe one of them is in mobile phone space. But they're definitely decreasing dependency on linear TV.
Yeah, I know Spectrum offers internet phone service. You also see the carriers, T-Mobile and Verizon specifically, and AT&T, I guess, for some time now, offering internet service. It's over cellular connection essentially. I tried it; it's not that good, but they are being pretty aggressive with pricing and trying to bundle things together. So,
and Spectrum's, for those who don't know, Spectrum's held by Charter Communications. That's
right.
Yep.
I use Verizon here at home. I cannot get a Spectrum. It's really hard, and it works super good. 5G connection.
The Spectrum network is the Verizon network. It's just branded differently. They use their towers.
So MVNO of Verizon?
Say again, Hardy? Sorry.
So it's an MVNO of Verizon, a mobile virtual network operator?
Yes.
Yes.
Okay.
9:30. Here we go.
Let's mark it open, everyone.
Oh,
Try
casino.
not to lose too much money today.
The problem with Verizon is they spent so much on their 5G, they're going to be cash strapped and not really earning for the next 3 to 5 years, so the stock price reflects that too, from the 50s now down to the 40s, almost 30s, right?
Yeah, the whole millimeter wave thing was a bit of a bust. The range and usability is just not there. I don't think people need 3 gigabit download speeds or whatever so they can pull in their porn videos in less than a second on a street corner. Like, I think they're okay to wait 10 seconds.
You do know
that was meant
video
for rural
games
customers.
They mostly use up for video games, you know that, right? Which are like 80 gigs.
Also true.
Yeah, but I think those millimeter wave towers, the sub 6 or whatever it's called, I think those are the ones where the range is really poor, and so like even people who have supposedly coverage, they're having trouble if they're pointing the wrong direction with their phone. So I think T-Mobile's mid-band approach was much more cost-effective and spans distances better, to Hardy's point about the rural community support. So I see T-Mobile having done much better than Verizon in stock price, and I think it's a direct result of that strategy. That plan's already sailed, though. I mean, all this stuff is already materialized in the price for some time now.
I got a play for you guys if you don't mind.
Okay, guys, I am only down 4,800. These bags are getting lighter, looking good.
I got a question wondering if anyone could answer in regards to an ETF like Boyle. I see a lot of people in different chats and forums kind of talking about, looking at the RSI and MACD and different technical indicators for it and saying it's overbought or oversold. Does that have any effect since its price is based off futures contracts?
I mean, I guess in a general sense, it could be. I don't. The fact that it's futures contracts, it tracks price, so you could always do your crayon drawings, if you will, and draw your triangles on there. My fear with that one is people holding that longer or buying longer dated calls or puts on it because there's data decay on it. Resets every day. I think that's the bigger risk than people talking about RSI. That's just charts, which is
Out of curiosity, who here can explain the formula for RSI?
1 second, it's in my brokerage app.
I was gonna say probably you.
So my problem with most technical analysis indicators is that they require multiple days in the past in order to come up with a value for the present. So if there's a major change in the present, it takes a while for the effect of that change to be represented in the future.
Isn't that kind of the fault with all technical analysis, though?
No. Indicators specifically. Technical analysis involves certain price levels or chart astrology. And then you have my brand of analysis, which uses derivatives. So,
Hardy, are you saying that when the 50 MA crosses the 200 MA, I can't time the bottom?
the reason why that particular signal works is because so many other people believe in it, and that's kind of my point.
Yeah, I'm just joking.
You need
It's just a momentum indicator. The faster the price goes up, the higher the RSI is going to be, and vice versa.
RSI, to my knowledge, is basically the number of up bars divided by the number of down bars in the previous 21 bars, and then normalized from 0 to 100.
I mean, don't we have that issue anyhow with all the algos chasing these things? Everyone knows what the moving 200 over the 50
Well,
is.
I can tell you that very few hedge funds actually use any form of technical analysis indicators.
They mostly use algos?
The vast majority of them do some form of gamma scalping or pairs trading or arbitrage.
To me, that speaks volumes right there. They don't, no hedge fund that uses that as a trading, if you will, window or a window to what they want to trade.
Correct. What was the order say?
I just wouldn't make a trade based solely off RSI.
Oh, which trade is that?
Any of them, man.
Yeah, I guess my general question was more of like you could have, everybody could be buying the Boyle stock right now, but if natural gas if the production keeps going up, I mean the price is just going to go down of the future contract. Is that how that would work? That's where I'm kind of confused. It's like, well, if everybody's all of a sudden everyone starts buying up the ETF, would the price go up? But even though the futures contracts are going down, I don't know.
Sorry, just placing my short puts for the day. Give me a minute.
Hey, did we talk about Tesla Day?
No. What do you have to share about that?
Nothing. I just saw it come up in my feed, so I was just wondering if there was any conversation around it, if there's any plays or plans.
Usually it's on the order of sell the news. Even with the battery announcement that was made last year or maybe 2 years ago now, there wasn't a lot of news around that.
So we talked about it last week. So it is going to be on March 1st. And kind of the catchphrase for that is energize the world. So it probably will be more battery information, whether it's actually something substantial, which Elon doesn't always deliver. He is good for that pomp and circumstance. So I would echo Hardy's idea of kind of, if you want to own it going into it and then sell it when whatever new product that he's pitching comes out, because it's not necessarily going to add to the bottom line immediately, as we've seen with the Cybertruck and pick your other dream.
So no real plays. They're up about 3.5%. Almost 4% now. It's going up quite fast.
And that's the other problem too. This is old news, so I think a lot of people have bought going into it the last 3 weeks or so since the announcement has been made. That's not necessarily the investor day is not breaking news, is my point.
Gotcha.
Touching on the subject of Netflix making a contract with, I guess, hotels, they're already doing something similar with T-Mobile, since you get free Netflix through T-Mobile. And HBO has the same thing with, I think it's AT&T.
Yeah, you are correct. And Verizon has done some of that too with like free Disney for a while. A lot of them have been subsidizing it. Again, one of the problems with the phone carriers as an investment is that it's somewhat of a race to the bottom. Even with the T-Mobile acquisition a few years ago of Sprint, they're all still spending money to make money, if you will. So I think that's probably priced in as well.
Yeah, that makes sense.
On the Boyle thing, if you're a little sketched out about getting into futures, another stock that's in the natural gas is TNP, and they've just been killing it lately. So I'd look at them.
I was more playing Boyle as a swing trade, but I was just curious. 'Cause I just saw a bunch of people talking like, "Oh, it's overbought right now. It's overbought, and it's going to drop." And I'm like, "Well, does that really matter with with an ETF that's based off of futures?"
I hear you.
Yeah, because generally, I still think natural gas isn't gonna. I mean, I really can't see it skyrocketing anytime soon unless we get like a ridiculous hot summer or a ridiculously cold winter or something happens with trade where we can start unloading more natural gas. But everywhere, almost everyone is stockpiled in natural gas.
And to your point, I'm not 100% sure how that Boyle works, but if they are going out into the market and buying those future contracts, when every time someone buys a share of Boyle, then they're adding to it. So it's not like it's not a transaction that's going off the record, if you will. So yes, I think there could be upward price movement. And usually when people go into it, it does push the price up. Could it go down? Of course. It's a very volatile trade, especially being having leverage on it, if that helps.
Yeah, for sure. I like it. That's just the one thing I was kind of confused on. Somebody goes, well, it's tracking, I think it's like 3 months out future contracts, the price. So I'm like, well, it'd be depending on the companies that are buying at those contracts. I would assume it's more companies buying those contracts than anything. That would be kind of determining the price based more off of supply and demand than, if who's buying this one ETF versus even like UNG, which is just a straight, 1-for-1 on natural gas price. So
Anytime with leverage, they're out there buying some kind of an instrument or derivative to, mirror that and or represent that leverage. So if you don't understand it, gents and ladies, don't buy it either, I think is a safe bet.
Yeah, I'm playing the shipping of the natural gas more than the natural gas itself. I think it's a little bit safer.
Is that one ship? Are you FLNG? Is that what you're playing that? Yeah, that's a frequent flyer here.
Yeah, FLNG, also TNP, TK, and GNK, and FRO. Those are the shipping companies I'm in right now. I'm in it pretty heavy. Been doing pretty good on them.
Yeah, I thought you were reading off ETF. Yeah, you're definitely bullish on shipping. I hope everyone's looking at green arrows going up. VIX is down, market's up.
Actually, I see the Russell down almost 1%. It's kind of a strange mixtape. Can't put my finger on why that's happening.
All right, everyone. I think it's about time we wrap up for today. We talked about some pretty interesting stuff, but a lot of earnings this week that I'm pretty much looking forward to. A lot of stuff we didn't touch on, particularly Best Buy and Costco are things I was going to talk more about, but I think we can talk about that all tomorrow. Does that sound good to you guys?
I'm looking forward to
Sounds good.
Salesforce.
Yep. You guys have a good one.
Oh, yes, Salesforce as well.
tomorrow,
All right.
Peter.
Well, see you all tomorrow, and don't lose too much money. Cheers, everyone. Bye.